Today, I will be announcing the new king of oil and gas. Total of France is the new king of oil and gas, better than BP, better than Shell, better than ExxonMobil. You should not miss this video because I'm going to share with you why they're the new king of 2020 even though the oil has crashed. See you soon. Welcome back to Family Investment. Today I will be speaking about the oil and gas stock again. And we have a special guest here today, the new king, Total SA from France. I deem to be the new king of oil and gas. When I say new king, I think Total in the next 5 years will be far more superior than Shell, BP, ExxonMobil. Chevron, there's still a bit of competition there. But because I'm based in Europe, I'm very biased. I'm honoring Total to be the new king. So, welcome back. So for those who have never been on my video, my name is Alex. I always speak about oil and gas. So previously on my video, I've spoken about Shell stocks cutting the dividend. I'm personally a huge shareholder, huge stakes, and them cutting the dividend has been ultimately disappointing. And what makes it worse is the figures and numbers that came out from Shell. Disappointing figures of their poor cost-cutting control, disappointing figures of how they're managing the cash flow, and ultimately disappointing how they're trying to survive through this. But this video is not about Shell. I had enough of them. I'm going to speak about the new king. Let's get some good news in the oil and gas sector for investment. Previously, as we spoke about Shell, you've seen their net income. Their net income dropped 55%. BP's net income dropped 66%. Shell cut the dividends, BP didn't cut the dividends. Between the two companies, BP had even worse liability compared to Shell. Okay, and then here comes Total. The whole horizon has changed ever since the earnings came out. I've been so excited. I just really want to share with you guys my findings. So Total, they've retained the dividends of 0.66 euros. And the net income dropped only 35% compared to the rest. And the budget, they slashed the budget by 25% from 5 billion to 4 billion. But if you see the budget of the other two companies are way even higher, 5 times of Total. In fact, Shell is spending 5 times more, BP is spending 3 times more. But Total has managed its cash flow, has managed its expenditures, expenses, and liability very, very well. What makes it even better is the lifting cost. Shell's lifting cost is between $35 to $40. They need oil to be above $35-40 before they make money. BP has announced the lifting cost is $35 a barrel. So, like as I said, $35 more, they make money. But Total has announced a staggering figure. At first, I thought it was between 32 to 35. No, in the last report, they've announced that lifting cost is $30 a barrel. And then if they keep cutting the cost, if they do what they're doing, they have planned, nothing new, they can push it down to as low as 25 if they can. Okay? And that's amazing, $30. So if oil is at 30, Total is already breaking even. If it goes above, Total will be making money. If oil hovers between 35 and 30 for the next 6 months, Total will be making money. Whereas BP and Shell will still be making loss. See the huge difference between a $5 difference for lifting cost. And in this video, I'm going to explain to you what has happened step by step. So you can understand, it helps you make a decision whether Total SA is one for your portfolio. For those who don't want to stay too long, I would say final summary, just skip to the point. Don't even fast forward. I'll tell you, yes, Total SA is one to own. They are the king. That's the whole point of this video. So for those who want to stay longer in this video, I'll explain to you step by step what they'll do and what the future holds for this amazing French company. And remember, there was an oil crash in 2015, okay? I just need to remind you, there was an oil crash in 2015. And regardless of that happening, the likes of Shell and BP do not seem to understand. They don't seem to understand, and they are still cutting costs. Total has been cutting costs already since 2015. They're still cutting costs, freezing employment, trying to optimize the team as much as possible. And when it comes to crunch time, they are performing. And the other thing, the third point I'd like to make about Total is they're not afraid to sell off liabilities. They're not afraid to sell off businesses that are dragging them down. To be able to come to $30 a barrel, they've been aggressively selling and buying good quality companies. For example, Total back in 2017, they bought Maersk for about $5 billion. And Shell bought BG Group for $50 billion. What is going on, people? What is going on? Maersk is like a nice Porsche GT Turbo. Maybe engine needs a bit changed, a bit tweaked, polish it up, it's a brand new car, it's a classic. Shell buying BG Group is like buying an old Toyota Supra. All beat up, even the fact that you ramp it up, you tweak it up, you spend all the money, it's still not gonna beat a GT Porsche Turbo 911. The new CEO, not new, he's been there for 5 years, Patrick Pouyanné, you know, he has announced in his call as well when the oil dropped that he is taking 25%. Him and his board and his team and his all higher-ups are all taking 25% of the salary reduction. They've just put a hand up, said we're taking 25% salary reduction because we're being paid too much. Exactly the words he said. Not just him, but his team. So that the company can move on with cash flow. Total, they've hold back the buyback, shares buyback. So £2 billion, they've hold back saying we're not going to buy back our shares, we're going to keep £2 billion in reserves. And in total, I need to mind my words, Total and Total, the cash preservation until the end of the year on this chart here, the liquidity availability will be 25 billion by the end of April, which is grade A credit rating. So they've got enough cash flow to keep them going. You know, they don't have to do significant reduction to keep them going. And this chart is ultimately impressive. Okay, Total, look at this chart. Total more resilient in 2020 than in 2015. And remember, in 2015, oil was only as low about 30, touching $25 per day. But remember, in 2020, oil went as low as 20 and WTI crude went negative. Okay, but they're geared, they're ready for this. The gearing, they're actually in 2019, they were making profit, cash break even at $25 a barrel, upstream, organic capex, they're doing really well. So they've prepared for this, all their cost cutting measure, all been prepared. And I remember the words by Patrick Pouyanné, I believe in 2018, Total in the next 10 years will be far more superior, more healthy cash flow, more green, more prosperous than the last 10 years. And remember, the last 10 years oil was over 100, 120 before the crash. And he reckoned even in a low oil climate, in the next 10 years, Total will be doing really, really healthy, not just in Europe, but globally around the world. The next thing I would like to share about Total, 2050 is when all major oil operators are trying to go green. They're trying to go zero carbon emission. They're trying to go as low as possible. And as an oil company, it's difficult because everything you extract, everything you use, it's counted as carbon emission more than anything else. So what are they doing about it? But Total, on the other hand, they've just been buying up. Okay, so I've got a list here. March 2020, they have bought up Global Power Wind Energy in France, 1,000 megawatt onshore wind, and by 2025 there'll be 250 more. So by May 2020, Total with Spanish Solar Power, Powertis, and Solar Bay Renewable, they're in the project for a 6 gigawatt to 40 gigawatt by 2030 in Spain. And the third one, Total has bought up 50% stake in Adani Solar business. It's just announced in February. 2,158 megawatt solar panel owned by the Adani engineer, so Total will own half of them. They just took cash, boom, we buy half of your stake, we're trying to get our portfolio grown more green. And also, it's not finished yet. Sun Power of USA, one of the biggest solar power panel producer, utilities, Total has about 60% stake on Sun Power. So they did say by 2050 they want to be net zero in Europe, 20% of the capex in low carbon electric by 2030. I think Total should be very, very close before 2040. To bear in mind here, a company with bigger cash flow, with more money in the bank, not raising money through bonds and shares, company with healthy cash flow can buy other companies cheaper. Especially when this oil low climate with the COVID-19, loads of companies will be very devalued, even by half. losing their values from 25 to 50%. And this is the opportunity, this is the best time to buy green initiative companies. And Total will be in a very, very good position compared to the other rivals. This is the reason, this is one of the key reasons why I've given this man, oh man, this lady, the king or queen. Okay, so the last part of the presentation, I'm just going to go a bit more technical analysis. More technical analysis to see when and where and how will be a good point to buy. So on the first chart here, in the last 3 years, the average norm for Total share price is around about 45 euros per share. You know, they've gone up and down, but the average chart is about 45 in the last 5 years, including 2015. Last 5 years, 45 euros a share. And from my calculation, from what I see from the spreadsheet of cash flow, from the intrinsic value calculation, I think by the Q1 of 2021, Total should be up to $40 a share. That's assuming the oil has gone back up, hitting $40, $45, $50. And because they'll be making profit as soon as it surpasses 30, Total should be reaching $40 a share. So the next Q2, Q3 will be looking really, really healthy. The second chart that I want to show you here is currently Total is valued at $31 to $33 a barrel. Total is valued at 33 euros a share. So it's between 31 to 33, that's where they're hovering at. So as it seems just now, if you look at the stochastic chart down here, it looks like they're going on a downward trend. And once they hit about the 22 mark, it should be a time to buy. So if the shares drop between 31, 32, you know, it's a no-brainer. It's time to buy because it's going to go up. But then just be careful. It's going to be prolonged, going sideways for quite a bit until the oil recovers, and that's when it's going to start stimulating it back to go towards the $40 mark. So if you check this graph a bit more detail, a bit more in depth, yes, I've drawn two support lines, one at about 31 and one at about above 33.5. So the floor, if it starts declining because of oil climate, it starts breaking below that floor of about 31, it's going to hit 30, then that's his next support floor. So Total might still have a chance. If the oil starts dropping again, it might still drop below, going close to 30. But if that doesn't happen, then you see the ceiling being pushed up to a point that it might break 33. It might start going to 34, 35 soon if oil starts recovering. And as you can see on the graph itself, when it was hitting its low point, if you see on the RSI when it's around about 20, it's oversold. That's when Total shares was way below about 26 euros a share. And that was the right time to buy. And it goes back up again. And so I don't think, unless the oil climate drops really bad again, then you're going to see that region of 26 euros. But for now, it seems everything looks to be healthy. Investment are really confident with the cash outflow, the cash outgoing, the balance sheet figure. And it's less likely we're going to see that unless the prolong of the demand of oil still is really, really low. That might be a story that Total cannot control. But they've taken control. They've taken control of the hot seat of the cash flow and balance, which is really impressive. So that's it. So finally, for me, personally, I am really strongly considering to move and sell up my Shell shares and moving over to Total. The fact that you've got a great CEO who's got a great vision, who cares about a company then more than himself. You have a company that's got control of the liability, great cash flow, and going green initiative, it's making it really attractive. And the fact that recovering oil, hopefully in the demand recovery up to 2021, we should see a good 25-30% growth. And also dividend being paid out to their shareholders. So Total for me is the new king, no doubt about it. This new king in the house. The figures don't lie, the figures don't shy, and all. So Total SA is a buy for me. Between the point of anything under 32, 31. If it goes below, rebuy again. It's a company to own, and time to dump your Shell stocks and try to go to a better, greener, more effective, more cash flow company. Have a good day, guys. Please like, subscribe on my channel, and if you like, go my Facebook page to see more of my work. And if you like to support me and my work that I do here, please do on my Patreon page and do a monthly pledge if you really like my work. And there I'll show you a bit more technical details, a bit more data, and then you can speak to me. Okay, so have a good day, and I hope this helps you get rich? Well, I get rich. Bye!